U.S. stock markets are experiencing significant weakness, primarily driven by a looming earnings report from Nvidia. With the Nasdaq index facing pressure, investors are left wondering, what does this mean for the tech sector's future? Looking ahead, the immediate focus will be on Nvidia's earnings report scheduled for tomorrow. This report is particularly significant as Nvidia plays a pivotal role in the semiconductor industry and is a leader in AI technology. The company has been at the forefront of AI innovation, providing crucial hardware for machine learning and data processing. Analysts and investors are eagerly anticipating whether Nvidia will surpass expectations or provide guidance that could signal further market weakness. The tech sector has faced volatility recently, with rising interest rates and inflation creating uncertainty that has investors on edge. Two distinct scenarios could unfold depending on the results. If Nvidia beats expectations and provides strong guidance, we could see a rapid rebound in tech stocks, potentially reversing the current sell-off. A positive outcome would likely restore investor confidence in the tech sector and validate the AI growth trajectory, which has been a major driver of market enthusiasm in recent years. Conversely, if Nvidia disappoints or issues conservative guidance, the current weakness could deepen, leading to a broader sell-off in high-valuation growth names. Such an outcome could trigger a reevaluation of the tech sector's sustainability, sending ripples through the AI and semiconductor markets. The implications would extend beyond Nvidia, affecting suppliers, competitors, and even the broader economy, as tech investment is critical for future growth. In the coming days, investors should watch for market reactions to Nvidia's earnings, as well as any commentary from analysts regarding the implications for the tech sector. The question remains, will Nvidia's results reinforce the bullish narrative around AI, or will they signal a need for a more significant market correction? The stakes are high, and the resolution of this earnings report could shape market sentiment for the remainder of the year, influencing investment strategies for months to come. The current market dynamics have evolved over the past several months, setting the stage for today's tension surrounding Nvidia's earnings. Following a robust rally in the tech sector, investors have become increasingly cautious, leading to the recent pullback in stock prices. Key indicators suggest that momentum has cooled significantly. For instance, fewer S&P 500 stocks are now trading above their long-term trend lines, signaling a potential weakening in market breadth. This shift comes as investors grapple with the reality that the rally may have become extended, prompting many to reassess their positions ahead of Nvidia's pivotal earnings report. The tech sector's growth has largely been driven by the AI boom, which has fueled high valuations and investor enthusiasm. Nvidia, a leader in graphics processing units, has played a crucial role in this surge, making its upcoming results particularly significant. Historically, major earnings reports from influential companies like Nvidia have served as critical turning points for market sentiment, often dictating the trajectory of the tech sector. While the industry has capitalized on innovation and the growing demand for AI technologies, concerns about sustainability and valuation have emerged, especially amid rising interest rates and economic uncertainty. Analysts are acutely aware that Nvidia's performance will either validate the prevailing growth narrative or necessitate a recalibration of expectations across the sector. The implications of this earnings report extend beyond Nvidia itself, potentially influencing the broader tech landscape and shaping investor behavior. If Nvidia delivers strong results, it could reignite confidence in technology stocks, encouraging further investment. Conversely, disappointing earnings could signal a more cautious approach to investing in this volatile sector. As we look ahead, Nvidia's report will likely set the tone for tech investments in the coming weeks, with the potential to reshape market dynamics significantly. The ongoing weakness in the tech sector has become a crucial focal point for investors, particularly regarding Nvidia, a company that has solidified its status as a key player in the technology landscape. Nvidia's influence reaches far beyond its impressive financial performance. It significantly shapes investor sentiment across sectors tied to artificial intelligence and semiconductors. With a market capitalization exceeding $1 trillion, Nvidia's stock movements are closely scrutinized as they serve as a bellwether for the overall health of the technology industry. Investors are particularly anxious about the implications of Nvidia's upcoming earnings report, as it could influence AI hardware and infrastructure stocks, semiconductor suppliers, and even the broader NASDAQ index, which is heavily weighted toward technology companies. The immediate consequences of Nvidia's impending earnings report are already reverberating through the market. Many investors have begun to reposition their portfolios in anticipation of potential volatility. This cautious strategy could lead to significant fluctuations in stock prices, depending on whether Nvidia meets or exceeds market expectations. The economic implications of these shifts should not be underestimated. A robust report from Nvidia could rejuvenate confidence in the tech sector, potentially igniting a swift recovery in tech stocks across the board. In contrast, a disappointing earnings outcome could trigger a widespread sell-off, impacting numerous high-valuation growth stocks that have thrived in recent years. For the average person, the repercussions of these market movements extend beyond Wall Street. A downturn in tech stocks could signal a cooling economy, which would likely impede job growth and stifle investment in innovation. As technology continues to play an increasingly vital role in shaping the global economy, its health becomes crucial for everyday consumers who depend on these advancements for their livelihoods and quality of life. Looking ahead, the outcome of Nvidia's earnings report could set the tone for the tech sector for the remainder of the year. If Nvidia delivers strong results, it may catalyze a broader rally in tech stocks, while a weak performance could usher in a period of uncertainty and caution among investors. The stakes are high, and the implications could resonate throughout the market landscape for months to come. On May 20th, 2026, U.S. stock markets faced continued pressure for the third consecutive session, signaling growing investor unease. The Nasdaq Composite Index fell notably more than the broader market, driven by investors trimming their exposure to the technology sector. This decline was particularly evident in memory chip and AI-related stocks, as many awaited Nvidia's critical earnings report scheduled for the following afternoon. As of market close, the Nasdaq had dropped by approximately 1.5%, while the S&P 500 also saw a decline of 0.8%. This trend occurred despite Treasury yields and crude oil prices easing, which typically would support stock prices. However, the anticipation surrounding Nvidia's performance overshadowed these favorable developments. Nvidia, a key player in the semiconductor and AI hardware markets, has become a crucial market bellwether. The company's earnings results extend beyond just one stock. They significantly influence investor sentiment across various sectors, including AI infrastructure and semiconductor suppliers. The heightened focus on AI's impact on market valuations has made this situation particularly intriguing. Investors are on edge, waiting to see if Nvidia's results will validate the robust growth narrative surrounding AI or challenge it. This anticipation is compounded by the fact that Nvidia has been a major driver of tech sector growth, with its products being integral to advancements in artificial intelligence and machine learning. The impact of Nvidia's performance could reverberate throughout the tech industry and beyond. A strong earnings report may reassure investors and lead to a resurgence in tech stocks, potentially stabilizing the market. Conversely, disappointing results could deepen the current sell-off and heighten fears about overvaluation in the tech sector. Analysts are acutely aware that Nvidia's performance is not merely a reflection of its business, but a lens through which the entire AI market is viewed. Looking ahead, the outcome of Nvidia's earnings report will be pivotal. If the company demonstrates solid growth and strong guidance, it may rejuvenate investor confidence in tech equities. However, if expectations are not met, we may witness a broader reevaluation of tech investments, prompting a more cautious approach among investors moving forward. The stakes are high as Nvidia's earnings could reshape market dynamics in the coming weeks. As we await Nvidia's earnings report, will it validate the tech sector's growth or indicate a need for a deeper reset? Share your predictions in the comments below and subscribe for daily deep dives into today's pressing financial news.